Hi, Mark Schweibens, Property Resources, where we do one thing, we sell buildings. So this is part of a little series for office tenants because we see the office market eroding a little bit, and there's likely to be quite a few tenants out there that could switch from being a tenant to a building owner. So this is all part of some of the things you may want to consider. Today's video, playfully called Don't Pay Taxes. Of course, this is all up to your CPA. But I want to introduce you to a topic that a lot of people aren't talking about, and that is the fact that you can customize the depreciation on a building that you buy. But depreciation confuses people. Just think of it only as a write-off. It's just a tax deduction. The government lets us depreciate buildings. It gives you a tax deduction, even though the building's going up in value, generally speaking. Depreciation is a tax deduction. Over time, most people have been following what is the conventional depreciation schedule. You take a building, in this case we're going to use a $3 million building, we're going to use it in both examples. You don't get to depreciate land. So 20% of that building is land. The balance of the building, $2.4 million, we're going to depreciate over 39.5 years. So you go buy a $3 million building, and every single year for 39.5 years, you can take $60,000 off your gross income before you calculate the taxes you owe to the federal government. But what a lot of people don't pay attention to is that you can accelerate depreciation. And Donald Trump took it even one step further. Love him or hate him, he adjusted the tax code as soon as he got to office and allowed for accelerated depreciation. And a lot of our customers don't know what that is. Most CPAs understand what it is, but sometimes you have to ask your CPA, hey, could we do this? So in this situation, we've gone from conventional depreciation over to accelerated depreciation. We take that same $3 million building, but we take all of the components that have a useful life of less than 20 years, and we can deduct those year one. Conventional depreciation gives you a deduction of $60,000 a year. This procedure lets you write off in the first year $1.2 million off your gross income, and you can carry those losses forward, and you still get a deduction of $28,000 each and every year for 39.5 years. We have one customer that buys an office building every single year so that he doesn't have to pay federal income tax. This is worth looking into. If you have more questions, give us a call. Property Resources. We do one thing, we sell buildings.